Welcome back to Alpha Recap. Thanks for joining us. Markets closed with a pretty clear split today. Concentrated strength around AI hardware and industrial capex, and pressure across some of the more regulatory-sensitive corners like cannabis, crypto, and parts of healthcare. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. We're unpacking the June 1st tape and all the headlines that shaped sector rotation. There's a lot to get through, so let's dive in.
Quick roadmap. We'll hit the big movers, dig into the Nvidia-driven hardware rally, walk through regulatory and security headwinds, and end with practical takeaways. Sound good?
Perfect. I'll jump in with the big picture. The executive summary was basically this. Tech, industrials, and pockets of real estate outperformed, while cannabis, crypto, and slices of healthcare underperformed. And there were a handful of macro and corporate finance headlines that amplified the split.
Right. One of the numbers that really popped was streaming subs and online video revenue, which is a communications and media story, but also ties back to tech demand. And the number that really caught our eye was about 2.2 billion streaming subscriptions globally, with online video revenue up about 13.5% year over year.
That's a structural growth read for ad and subscription models. So communications and media had a tailwind, even if company-specific issues kept the group mixed.
Another clear macro data point was ISM manufacturing hitting a multi-year high, which helped industrials and capex-related names.
Yeah, that tracks.
Let's shift into the day's dominant theme, Nvidia-led AI hardware momentum.
Huge. Nvidia headlines dominated. We heard about the RTX Pro 4500 Blackwell workstation, the RTX Spark moving into consumer PCs, and Vera CPUs landing some early customers.
Exactly. Those aren't just product releases. Analysts note these are tangible signals that AI spending is moving beyond cloud-only pilots into on-prem workstations and edge deployments.
So, what really stands out here is the breadth of the demand signal. It hits chip suppliers, OEMs, data center suppliers, and even industrial software vendors that run simulations and digital twins.
And that's why tech and industrials outperformed. When hardware demand broadens, procurement cycles lengthen, and capex forecasts get uplifted across a wide group of companies.
Right. And the other thing is, when workstations and AI CPUs enter enterprise budgets, you start seeing a trickle-down effect into services, software, and even real estate through data center demand.
Short reactions.
Big move.
Not what anyone expected.
Okay, let's talk about corporate finance, another big influence today.
Alphabet proposing about $80 billion in equity issuance was a headline, and Berkshire stepped in to take a discounted allocation. Separately, Berkshire agreed to buy Taylor Morrison for about $8.5 billion. That combination had broad flow effects across tech and real estate.
Analysts note that a large equity raise can be parsed a few ways: opportunistic capital access, financing acquisitions, or shoring up flexibility for AI investments. Berkshire's participation at a discount was read as a vote of confidence by some, which is interesting.
Honestly, I was a bit surprised by this one. Berkshire buying at a discount and then also doing an $8.5 billion real estate acquisition? It's a reminder that big cap financing moves reshape liquidity and index flows.
That's a flow driver you can't ignore.
Now, on the downside, cannabis, crypto, and parts of healthcare were pressured today.
Yeah. For cannabis, a wave of regulatory actions, think state-level hemp THC bans and federal legal fights, tightened the risk premium.
That sector's volatility has been high, and the headlines just keep coming. It makes multiples compress when legal uncertainty rises.
Crypto also had a rough day. Reports of about $1.3 billion exiting IBIT, continued ETF competition, and a major exploit pushed Bitcoin and Ether lower heading into June.
Security incidents showed up in tech, too. Meta's AI support chatbot was exploited, and malicious packages surfaced in developer ecosystems like NPM. Those operational failures revive regulatory and liability concerns as companies rush to monetize AI.
Right. So, what really stands out here is that security incidents are no longer theoretical. They have immediate revenue and timing implications for product rollouts and can trigger regulatory scrutiny.
Short reaction.
Not great timing.
Let's walk through the cross-sector themes that tied today together. First, AI hardware as a cross-sector accelerator.
AI hardware momentum isn't just a chip story. It spills into industrials, communications, materials, and even real estate via data center demand. The RTX Pro workstation and Vera CPU wins are concrete product cycle catalysts.
Second theme, regulatory and legal risk compressing multiples in sensitive sectors. Cannabis, healthcare, especially GLP-1 related scrutiny, and crypto all felt that pressure. Data suggests policy headlines directly influence cost of capital and margins there.
Third, security incidents, amplifying operational and regulatory scrutiny for tech platforms. The Meta exploit and NPM issues are examples of execution risk as firms accelerate AI into customer experiences.
Fourth, capital flows and corporate financing shaping sector leadership. Alphabet's planned issuance and Berkshire's moves were a reminder that big financing events can alter liquidity and relative performance.
And finally, energy transition versus geopolitics. We saw renewables milestones, but also policy support for gas. A Dutch €1.2 billion gas refill subsidy, and talk of an Azerbaijan-Europe electricity corridor. That duality increases dispersion in energy returns.
Let's give listeners a few actionable, informational insights. Not advice, just signals to watch.
First, map exposure to the AI hardware cycle. Data suggests CapEx is broadening beyond cloud. Watch OEM backlog and semiconductor equipment bookings for early signs of durable demand.
Second, keep an eye on regulatory calendars for cannabis, healthcare, and crypto. Legal filings, state rules, FDA and Medicare guidance, and SEC or CFTC commentaries can produce sudden re-rating events.
Third, treat security incidents as a moderating factor on AI monetization timelines. Track remediation disclosures, bug bounty program changes, and third-party audits as signs of risk reduction.
Fourth, use macro signals to size cyclicals. ISM at a multi-year high supports selective exposure to industrials and materials tied to CapEx. But company-level order commentary will confirm the story.
Fifth, watch large financings and M&A as flow drivers. Whether the $80 billion equity plan lands and how Berkshire's participation is structured will influence short-term liquidity.
And for energy, balance transition exposure with near-term security themes. The coexistence of storage rollouts and gas subsidies suggests value in diversified energy exposures.
Quick reactions under 10 words.
Okay, good context.
Yep.
Before we wrap, what are the catalysts to watch next week?
Keep an eye on Fed speakers and inflation prints. Powell's comments about central bank independence were front and center today and could influence risk appetite.
Also watch AI hardware order flow in upcoming earnings, PMI follow-ups, and corporate order book commentary. Those will reveal whether the CapEx cycle is sticky.
And on the headline risk side, regulatory actions in cannabis, healthcare, and crypto, plus any new security incidents tied to AI rollouts.
All right, time for final takeaways.
1. June 1st reinforced a dual market dynamic, a concentrated rally driven by AI hardware and CapEx, and countervailing weakness where legal, security, and liquidity stresses exist.
2. Product cycle catalysts like the RTX Pro 4500 Blackwell workstation and early Vera CPU wins made AI demand feel more tangible, helping tech and industrial leaders.
3. Regulatory, legal, and security headlines can quickly compress multiples in cannabis, crypto, and parts of healthcare. So watch filings and remediation timelines closely.
4. Large cap financing and M&A. Think roughly $80 billion for an equity plan and an $8.5 billion real estate deal are active flow drivers to monitor.
Final thought. Momentum suggests selective opportunities where fundamental and product catalysts exist, but attentive risk management is important given how quickly headlines can flip sentiment.
That's a wrap for today. If you want the write-up behind this episode, check out our sector roll-up on the site.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.